going on, everybody? Happy Friday evening to you once again. September 17th. Wow. Can you believe it is September 17th already? My goodness. I don't know about you guys, but it certainly does not feel like September 17th. It feels like July 17th, June 17th, middle of summer 17th. I'm in Northeast Ohio region, and we had like a nice couple of days. Let me just actually step one further back. I hate summer. I hate heat. I love the winter. I love being cold. I love snow. I know that makes me crazy. If you guys knew more about me, you'd be like, that's the least of our concerns, that he likes cold weather. But I am so ready for fall. And we had like a week where we had those like, really nice nights, and I could open the windows and like let some cold air in the house. And man, overnight, the temperature in the house dropped down to like, really, really low. And then out of nowhere, it just seemed like we got this horrible heat wave. And now it's like the heat is worse right now than it was in the middle of summer, because you're in that mode where it's like you're almost ready for fall, and it hits different in September. So I am ready. I am ready for fall. It's September 17th. It's time to move on. All right. It's time to move on. I think Tuesday is when our day trader Gaines wants me to talk about options. He does not want me. He wants me to talk about options. He doesn't want me to make small talk with you guys. He wants me just to talk about options. All right. So we're going to cut the crap. We're going to start talking about options. That's what you guys tuned in for. You don't want to hear anything else. We'll get there in a second. We are, my name is Brad, if you haven't been here before. We are live every Friday night on Benzinga. We talk about all kinds of stuff for about 50 minutes. And then at the end of the show, maybe for about 10 minutes of your time, I'm going to talk about options. So you have a long way to wait until we actually start talking about options. But until then, I'm just going to entertain you. No, I'm kidding. We talk about technical analysis. We talk about options flow trading. We talk about how to use all of these resources to become a successful options trader. We do a lot of chart reviews. We do a lot of discussions about the Greeks and things like that. And one of the things that we're going to talk about tonight, I've actually been trying to build up more of a, like a little bit of a, like I don't know if I should like a catalog maybe is the best way to describe it. But I'm trying to build up like some content. Okay. And so I've been asking people that I interact with to kind of submit information as far as like trades that they've made. And I'm not going to like call anybody out. I'm not going to like put your name out there and say, this is the horrible trade that you made or anything like that. I'm not going to do that. But I'm trying to get people to submit actual trades that they've taken, and where I can sort of help. If you, let's say, for example, you bought at X and then the contract immediately went against you, or you held for a little while and then you, like eventually it started to reverse, or maybe you sold into, like a breakout candle, and you sold it at a high amount, you made profit, but then you watched your contract just spike like crazy. So I get a lot of people that submit me, that stuff. They're like, what could I have done differently? And so what I want us to talk about tonight, we're going to get to it, is we're going to go through like what we always do. We're going to talk about some of the big trades from the week. We're going to talk about what were some of the big movers and things like that. But I want you guys to, if you had a specific, I forgot one link I need to pull up. If you have a specific trade that you made this week, okay, I'm not going to, you don't have to like, just say that it went bad or it was good, and you want it to like be better, or you wanted it to be not as bad. Okay. And we're going to evaluate some of the trades that were happening this week and see like, okay, so for example, I have SPY pulled up here. Like take a look at SPY. It's very clear what is going on with it. We're in a downtrend. Okay. I'm sorry to say this, stocks always go up. They do. But right now SPY is in a downtrend. And if you look at the top, Michael says second profitable week in a row, process over profits. Okay. So that is one of the, okay. So, I appreciate you sharing that. That's fantastic news. One of the things that I am always trying to get people to understand is, and I get to ask this question a lot. It's like, what's your profit goal for the day? Chris, you can submit it in the chat if you want to. If you have a ticker and a contract, okay, so if you took a trade and let's say you took an AMD call that expired today, just give me that information. And if you know something that went wrong with it, if you want to let me know in the chat, or I have my Twitter pulled up, if you want to submit it on my Twitter page, I will. Let me actually just do this here. Let me put my link to Twitter in the And if you guys would rather, instead of posting it in the chat, if you want to just send me a tweet, that's my Twitter page. Send me a tweet on there, and I'll follow along there. But I'd like to basically get some real information from viewers and stuff like that about your options trades, what went wrong, what went good. Let's talk about that. Damien actually has one that he did right there, so we'll talk about that here in a moment. But one of the things that I always talk about with people is it's not like don't set yourself like I want to make X amount of dollars per day. I want to make X amount of dollars per hour and things like that. I don't do that. Like what you have to understand is you need to develop a routine and you need to develop a system and a process for trading, because if you do that, then eventually what's going to happen is you are going to the trades are like, if you are committed to learning, if you are making legit good trades, okay, and I'm talking about your process of trading is well-rounded. You have good risk management. You're not like just taking a bunch of random plays and things like that. You're trying to become a trader, because anybody can make money trading, but it takes a lot of work to become a trader. Okay. And I hope you guys understand what I mean by that when I make that statement. Anybody can make money trading. Like, for example, these GameStops and AMCs that are, when they were first running, people were coming out of the woodwork that I had never even knew. Like, I knew that like they did certain things, but trading stocks was not one of the things that I knew that they did. And all of a sudden they're talking about, I made this, I made that, I made this. Anybody could have done that. Like, and that's not like an insult off of people making money during those times, because I made money during that time. But what I'm saying is, like, just because you had a good run during a month that all the stocks were going up 600%, 700%, 800%, like crazy amounts, what is going to sustain you in the long run as a trader is developing that system and that process and really working hard. So when somebody says that this is their second week of being profitable in a row, and they talk about process over profits, that's really important. And I talk about that a lot on this show. We talk about the practical stuff. We talk about how to become a better trader, not from just a dollar amount. You will rarely hear me say anything about dollar amounts on profits. I'm more concerned about, are you making good trades? Are you taking good positions? Are you not YOLOing on 0-day expiration calls and once in a while they hit? And like, there's a system to it. Okay. And so that's what we talk about a lot on this show. So I really appreciate you mentioning that, Michael. I'm really happy to hear that you had 2 weeks in a row. And listen, man, like I said, make good trades. That's what it comes down to. You make the good trades, the money is going to follow. Your winners, if they're more than your losers, that's what it's coming down to. That's what we're trying to do. Okay. So throughout this week, we had a bunch of runners, like we always do. Some of the, let's take a look here. Some of the bigger movers, from the week, we had, of course, Apple. Apple had a very, very strange week. I honestly, I think, okay, so let me just, as we, let me get my chart pulled up here. Wrong one. There we go. Third time's a charm. All right. We had, oh, sorry, I got distracted in the chat. Hassan, not Adam. What do you mean, Michael? I'm sorry. Oh, is your name Adam? Hassan, your name is, oh, okay. I apologize about that. I just saw your screen name up there and assumed that that's what your name was. Apple had their event where they released the new iPhone, they released the new watch, and they released the new iPad series. This is their big, their fall conference that they do every year. And so that was a big play for the week. I had a lot of people. Oh, sorry. Okay, got it. He's talking about ticker symbol. That's what, if you said Adam first, that's what really threw me off. We had a lot of people that were asking about like how to play Apple, and you could have really looked back on historical data and saw Apple where it sells off during conferences and things like that. I was of the mindset where, like, unless you were watching tick by tick, I was not telling people to get involved with the trade because it's too hard to predict. Okay, it's too hard. I really did not think Apple was going to have such a pullback from this area right here. It consolidated a little bit in this 157 area. And just to let you know, these purple boxes are just some of the larger support and, supply and demand areas. I try to draw more. So basically, supply and demand is like support and resistance, although it works more off of volume. So I try to draw boxes in areas where there's a strong level of volume and things like that. So Apple, this bar right here was the first step down, obviously. But then you kind of notice what happened here is we're just like SPY, clearly in another downtrend. Okay. That was a surprising sell-off. I think Apple is now in a range where if you are looking to enter, I think now is a good time to take Apple. I think I can't imagine it going to, because the next area is this about 144 region right here is probably where I'd say. And even if we're going to do this, I mean, just from like if we want to go from specifically like a levels perspective, I mean, we're at the, I don't want to call the bottom because, you know, stuff can happen, but I mean, from a fib levels perspective, I mean, you're running out of room for Apple to go any lower. And I mean, buyers are going to start to stepping in, you know, there's going to get to a point to where people, like, it's Apple. Okay. It's not going to, like, again, I was surprised that when it was in the 150 range, I was surprised that that was the area where it decided to, you know, sell off at. And I thought that it might have consolidated in that region a little bit longer before it eventually pulled back. Because you have to realize that Apple hitting all-time highs and things like that, people are going to naturally take profits. It's, you know, there's going to be people that are pulling money out to take profits on stuff like this, you know, and it's going to reach a point to where it's not going to continue to go up, plain and simple. Okay. I would look to enter into Apple right now. Now, is there the chance, somebody just said, can't Apple go lower during a correction like just a few months ago? Absolutely. I mean, every one of these stocks, you know, any drop of news right now, let me just say that, any drop of news could send everything reversing. And I don't mean that necessarily from like a, you know, we're going back to like a March 2020 type thing. You know, there was a lot of people that were calling for that to happen again. I don't think it's going to happen in the same manner. I think what you need to understand, though, again, we're putting this through the lens of options trading. I don't know how far out I'm buying stuff right now. Okay. So most of my trading is going to be day trade / scalping options. I'm in and out of contracts rather quickly. I'm looking for small profits accumulated throughout the day, taking 10, 15, 20 trades a day. I'm not, you know, I'm not in the nature of holding stuff for a long time. But with that being said, a lot of my trading is swing trading. Okay. So I am comfortable with scalping contracts. I'm comfortable entering in quick and leaving, and you know, I'm comfortable doing that. But I've developed a strategy that works for me that way. And I always say this on the show too: if that does not work for you, don't force it upon yourself. If you can't monitor your position all day, don't buy into positions that require you to monitor your position all day. Set yourself up for swings. However, my swing, you know, my range of swings that I'm playing, I'm not going any farther than like 40 days out. 20 to 40 days is typically the sweet spot. Now, that obviously depends on a lot of things. When I'm in swings, I am specifically watching options flow. I'm watching where money is going. I'm watching where, you know, people are buying up contracts. I'm watching where the money and the volume is going. So if I see something, you know, if I see something and that is flooding into, like, let's say, for example, it's September 17th. So my range would be, let's call it, you know, end of November. Let's just say I see a bunch of people going into the December 17th calls. I might follow, and it might be something that I'm going to do as well. And I'm not automatically going to exclude that call just because it's past 40 days. I suggest 20 to 40 days as the sweet spot. But again, everything is worth discussing. And so don't automatically, you know, don't, first off, if you're a new option trader, don't play weeklies. That's number one. And I say that every single show, because that's a very important thing to remember. Don't play weeklies if you're a new options trader. They move too fast. They're too volatile. You'll lose a lot of money. You might hit once in a while, but the grand scheme of things is you're going to lose money on it. You want to play monthlies because they're not as volatile and things like that. You want to play farther out because theta doesn't decay as rapidly. You want to give your chance, you want to give your contracts a chance to develop and things like that. So 20 to 40 days is my number that I always tell people. Thinking about it, one of our usual watchers, he says, can you discuss implied volatility plus minus dollar amount for expiration date versus the reality of the move? Seems to move much further than implied suggests. Okay, so basically, yeah, we'll talk about that here in a moment. Mike had an AMD 110 call, 1015 at $1.95, bought it September 16th yesterday. That's one of the ones that we're going to talk about as well. Toronto the Great says, when you have a put or a call and it expires next Friday, let's say we're in the money since the purchase, do we need to sell or does it automatically close your position? Okay, so depending on your broker, most brokers are going to give you the option of, if your call is in the money, you have to remember, or if your put's in the money, you are going, if it's in the money, that call or put is going to be exercised. So you need to either A, take profits before the end of the day on expiration day, or B, have your broker set it up to where it automatically asks you what you want to do, because some brokers will automatically execute, some brokers will not, and they actually ask you what you want to do. So depending on who you use, you want to check that. Now, does it automatically, like if you're in the money, does it automatically sell your contract to somebody else, then you just get the gains? No, it does not. You still have to sell your contract in order to get the gains. That's why I always recommend, if you have contracts, don't wait till the very last day, because 90% of the time it's already peaked and it's going to be coming down the other way. And then on Fridays, first off, like today, for example, you have all this stuff going on. So volume's crazy. It's not a normal trading day. Fridays are already bad to begin with, especially because, like people are just trading half days and things like that. So stuff doesn't move as much. But if you factor in, you have an option expiring today, your theta is at its highest right now. So it's decaying. And I mean, anything could cause that contract to tank. I always recommend taking your profits well before the expiration. However, if you are interested in exercising to get the contract, then you want to talk to your broker and see how they're doing it there. Easy, good afternoon, buddy. Thank you for stopping by. We also had a 110 call. Or was that the AMD one that you told me about? Yeah, that was the AMD. Okay, and then we want to talk about EQIX went bad, Ed. Leave me the contract that you went with. We'll take a look at that. But the first one we had, Damien said RSI $20 call on October 15th. And then Chris, the first one I see here that we actually had all the information was bought a $28 PLTR for today. All right, so let's pull that chart up on the 1 hour. $28 pelter. And it closed at 80 cents. You bought it at 42, sold it yesterday at 62. Okay, so right off the bat, that's not that bad of a trade. Let me just say that's a good trade. I had, what did I sell earlier today? Was it Lucid? I sold Lucid for a good gain, 30-some%. I'm trying to see. Yeah, it was LCID. I sold, for 30% quick hit today, but then it ended up just spiking. Like I sold into a candle that I should not have sold at. So let's just realize that first. Like, this is a good trade, 20 cents per contract. That's a good trade. Like, to give you a little bit of an example, if I were taking a 42-cent, $42 contract, I'm taking multiple. So for that, I'm probably taking 10. I mean, a $200 profit on that quick of a flip is not that bad. PLTR, let's kind of go back on the 10-minute and see what we were looking at here. So we are on the 16th. So the 16th is right here. Chris, if you have an idea of what time, maybe, we could take a little bit, more of an investigation so I can actually see on the chart. But real quickly, I mean, basically what you're looking at here in PLTR is a rising wedge, clearly bouncing off of support, clearly bouncing off of resistance. So it's trading in there's an uptrend, there's a pattern to it. However, I mean, obviously we're looking back, so it's, yeah, you could see it right there. We're looking back upon what's already happened. So that's hard to kind of factor in. It's hard to but it's in an uptrend. You had two areas where it bounced off of resistance. You had 1, 2, 3, 4 touches on bottom support. So depending on, where you're selling and things like that, the first thing I would have wanted to see is, what's going on with your support and resistance levels. That's number one. That's something that I always check. And then number two, an area that I'm always looking into is on the right side of my chart. I use what's called a volume profile. This is probably my favorite indicator. This is what I use the most for options trading. Basically, what you're seeing here is buying and selling volume by price. Okay, so you can actually just kind of like look over in the areas of where the volume bars are sticking out the farthest, and you can get a little bit better of an idea of where your volume shelves are. That's a term that a lot of people use. So like right there, for example, that's a strong area of, depending on where you're at, that's an area of support or resistance. And you can kind of see right here why it's that way, because look at all the candles that are in that area. That's a lot of areas that people are buying or selling. So depending on which way the stock is moving, or depending on which side you are on, that determines if that's an area of resistance or support for you. So that's one area that you want to mark out. So let's say, for example, you bought halfway up this candle right here. Bought at 55 cents. Oh, okay, thank you, Damien. Ed put his information too. Okay, cool. I'll get to you guys next here as soon as I get caught up. Let's say you bought halfway up this white candle, okay? And then in advance that right at this level here, it's going to approach some resistance. That's a flagged area that you want to watch out for, because if it breaks through that, it now has the possibility of going even higher. If it bounces off of that, then maybe you need to think about exiting, or, you need to be aware of what's going to happen the next time. Because looking on the chart here, again, there's bounces off of this bottom support. Okay. And then, I recovered it there. This is a strong looking chart. All right. This is a very strong looking chart. It's got multiple areas of easy. It is called here, let me pull it up. If you use TradingView, which I am back to TradingView, I say that jokingly because I go through trading platforms all the time, I feel like. It is called, if on TradingView or on TrendSpider, I also use TrendSpider too. Depending on what platform you use, it's going to be called something similar to a volume profile. Okay. Visible range is what I use. And basically what happens is the more you scroll and the more candles you add, it's adding volume to it. Okay. So you can really narrow it down, and you can get in there and change your settings around and things like that. And really, but basically what it's designed to do, it's showing you areas where buying and selling are strong. You can even put labels on these to show you the numbers compared to one another. Like you can see the amount of buying versus the amount of selling. It really is a good resource to have. I use it because I like this is the term a lot of us use, volume shelf. Okay. Volume shelf is basically, so say for example, we are buying into this white candle right here. We buy halfway up, let's just say. This area coming up, you're getting into a strong area of resistance, okay? Because remember, again, if you're below it and you're trying to go through it, it's an area of resistance. If you're above it and you're using it and you're trying to see if it's going to pull back, that's an area of support. But from this angle, you're going into it, so that's resistance. That area right there, that is going to be tough to get through because of the amount of volume that's there. That's an area that you need to watch out for. So if you are, first off, like let's say, for example, again, you took that trade on that white candle, you get into that area of resistance, and then what happens? Two things. It either reverses off that area of resistance or it breaks through it. That's all that's going to happen. If it breaks through it, then now you need to look for what's the next level of resistance, okay? So let's just say, for example, you're in this little box right here on this candle, you break through, and look at, this is interesting too. The actual, this area, so let's say we're buying right here halfway up this candle at 27.56. You get 1, 2, 3 candles basically that try to break out of that area and they don't make it. Then you get a volume push, and then what happens? You get an immediate bounce off of, you see this right here. You see this, the wick is on that red line. That's the area of resistance that we looked at from before. That's an area of resistance from drawing trend lines, things like that. It didn't break. And what happens? It immediately pulls back into this area. But now, again, look at what it's doing here. It's not really like that's not a reversal. that's just basically it's just consolidating. Okay. This is trading in a range. All right. So there's multiple areas of what the market does. There's uptrend, there's downtrend, there's reversals, there's pullbacks, and then there's consolidation, which is just the market going back and forth, trading sideways because of algos and things like that. That's what's happening here. This is not an indicator for you to sell. All right. This is just an area of saying like it's just consolidating. Okay. Once you're in this range here, though, again, this is where you need to keep an eye on. Now, what I'm using here, what's the difference between the normal volume at the bottom? Okay, so the normal bottom at the volume, this is just showing me buying and sell volume by ticker or by time frame. So, for example, we're on the 10-minute chart now. The bottom candles, I don't care about. I just want to see spikes, and I know if it's buying or selling. I just want to see spikes. So the bottom indicator, this indicator here, is just showing me volume based upon time. The volume over here is based upon price. I'm a little bit more concerned about that area. If I need to, I have another indicator that I can actually turn on. Do I have it? I don't have it turned on. I can turn it on and look at buying and selling volume. Actually, let me just turn on real quick for you. That'll make more sense. Favorites, buying, selling volume. Okay, so this indicator down here, this is showing you total volume by time frame, but it's also showing you buying and selling volume. Okay, so you can see how these little dips down here, this is showing you areas where the volume pulled back, or obviously if it's a green, that's positive volume. This is just kind of giving you an overview though of areas of volume. It's doing the same thing. Volume to me for my trading is volume, support and resistance, supply and demand, those and price action. Those four things are what I value the most when it comes to options trading. So I'm mostly concerned about volume. That's what I'm looking at a lot. Okay. Now, another thing that you also I have to mention here too, is I use a double EMA system as well. So I'm using quick EMAs. EMAs are the exponential moving average. EMAs are quicker. They are probably the quickest. The Hall moving average, the HMA, might be a little bit quicker, but for everyday usage and things like that, the EMA is going to be the quickest. It's still a lagging. Okay, so it's telling you what's happened. It's not a future indicator. It's a lagging indicator. But what I use is a 5/13 EMA cross. That's another one of my entry signals. Okay, so to get you a little bit of an idea of what's going on here, see this line right here, this red line. Baron's here. Good to see you. The buy sell volume is a great indicator. I love it. It's really easy to see what's like. It's one thing to see like, a million shares just got sold or whatever. It's one thing to see that, but to actually visualize what's going on here. Let me actually show you real quick. I'm going to show you one thing. I want to show you AMD this morning, and to give you a little bit of an example of what happened. Okay, so AMD this morning at 9:30. This is the 10-minute. Okay, so you see 9:30 today. This candle right here. All right, the range was 105, almost 106, basically down to 105.19. See this candle right here? This was a lot of selling. Okay, that automatically tells you that they're right out of the gate, they're pushing this stock down. But then do you see this right here? The volume just disappears. There's not a lot of volume. See how big this volume is right out of the gate? And that volume is high, but it's not enough volume to signify, you know what I'm saying? Like, it's not that. There should have been much more of a move than that on that big of a wick, or on that big of a candle for volume. And then you see it just decreases. Okay. So it's good to know what exactly is happening with your volume. You don't want to know, you want to know more than Babel. What the heck did I type that in for? You want to know more than just like there was X amount of shares traded. You want to know buying and selling. You want to know levels and things like that. So see whatever broker you use, see if they have a volume profile, see if they have a buy sell indicator, because turning that on will really help you to understand more about volume, because volume is that's the important thing. Like options traders, a lot of us, my job as an options trader, I am going where everybody else is going. All right. I am following the flow. I am going where the money is going. I don't want to get involved in the worst thing to do is to get involved with an options trade that's got no volume. Okay. Not to say that like getting in early before the wave comes is a bad thing, because no, it's great. If you want to get in on a call early, if you're convicted about it, that's a great thing to do. But I'm just saying, like, you don't want to get involved with an options trade that's got no volume, because you're just going to sit there and it's not going to move. Like, options are being traded back and forth between people. All right. Stocks have algos and computers and stuff like that. So they've got trading back and forth. It's automatic. There's volume coming in. Like, there's never zero volume that's not coming in at a certain time on a stock. There's at least, you know, there's at least some action with when you're trading commons. But with options, you know, you're going to look at some of these like this. Let me give you a good example. Okay, so this one on PLTR, this contract right here had 2. The volume was 2 contracts. All right. This one had 9 total all day long. It was 2 and 9. Okay. So that's 2 contracts. That's 9 contracts traded back and forth. Somebody bought, somebody sold. It's not that good. You know, I mean, you don't want to get involved with stuff like that. So that's why volume to me is so important. Joseph said, you live and die by the volume / acceleration. Absolutely. Love that quote. That's why I'm so big on like investigating where the volume is going. Like, that's my signal. Like, that's like, I have like my EMA indicators. I have the RSI on here. I don't even know why I have the RSI on here, to be honest. I never, like, I don't go, oh, well, the stock's oversold. That means, you know, no, the market does not react appropriately to oversold and overbought indicators. If that was the case, what was the stock we were just looking at the other day? The chart that went straight up in the air. It's going to take me forever to find that tweet. We were looking at a, I'm never going to find it. We were looking at a stock and on the weekly, and it was straight up in the air. The RSI was like 475 or something. That's not possible, just to let you know. I'm joking. But I'm using the RSI just as like more of a, like an overall gauge, I guess. Yeah, it's just there to give me some more confirmation. But as I was saying, I'm using the EMA cross as another entry for, like, if I'm going exclusively off of like a technical indicator. All right. Again, this is a resource that I use a part of all of my strategy. This is one of the things that I use in order to increase my chances of taking a trade that is good. The magenta, pink, whatever you want to call it, color, that's the 5-day EMA. The white line is the 13-day EMA. When those things cross, that is it's an entry signal for me. Okay, that is a pretty consistent entry signal for me to kind of, okay, it's time. You know, like, this is an entry signal for me, as long as other stuff is still pointing me in the direction. But I also use it as, like, say, for example, we're back in PLTR. You could have rode the 5-day EMA. It broke right here. You could have entered at this signal right here and rode till here. So you could have entered at, basically, let's just call it 27.10 and rode until 28.35. $1.20. That's a pretty good move. I'm fine with that. That's a good move just based upon one indicator alone. So as you are, maybe that's something that you also need to evaluate, is like, don't rely exclusively on technical indicators, because, you know, when it comes down to it, like, I'm teaching people that I'm working with now to focus exclusively on volume, price action, and movement and stuff like that. I'm telling them turn all their indicators off except for anything to do with volume. Because I think a lot of people are getting confused, like, well, the MACD crossed over or the RSI crossed over, and we're waiting for, a lot of times if you're waiting for that signal to go, it's already too late. So first off, don't crowd your charts with a bunch of indicators waiting for all of these things to align. If you are interested, the best thing for you to do, okay, find a trading software that lets you backtest and has a lot of indicators from you to choose from. And basically on the weekends, go through your charts and turn all these indicators on and see where the buy signals would have been. See where the RSI, the volume, the EMA cross all would have matched up to give you a signal. It's kind of interesting too, because a lot of times it's going to show you places where you could have bought in and you didn't. Believe me, that happens to me all the time, because it's a lot different to do backtesting and stuff like on the weekends and to kind of like, like, yeah, it's cool. It's Saturday afternoon. I got my feet kicked up, nothing's going on. But it's like Monday at 10 a.m. when I've got, friggin' 4 screens flying of information on. I'm trying to scalp Tesla. Thomas is screaming in my face. I got all this stuff going on. It's a lot different when you're in the heat of the battle. So what you want to do is when you are in the heat of the battle, you want to set yourself up to just be able to click buy, click sell, and it to become so second nature that you're not having to wait for all these indicators to trigger buy sells. Like you're not having to wait for indicators to trigger signals for you to get out or whatever, direction you're going. You want to make it as second nature as you can. But again, when you are trying to sell or trying to play option contracts for the most profit, you want to have your indicator. Okay. So if it's the EMA cross, that's something that I use. I don't necessarily exit upon a cross down, or I don't wait for that to happen, because sometimes, for example, on this trade here, so the cross, technically, it didn't even cross here. That's a bounce. So the cross happened right here. Okay. So my EMA signal, the cross happened on 15 September at 26.20. The cross back down happened at right here, 28.71 today. So I would have been in that call for 2 days with a $2 move. That's a pretty good, that's now you have to remember that, like, when you're playing options, there's more things involved. Okay. First off, I'm not holding something like PLTR overnight, especially on the week of expirations, because you're dealing with theta. And when you're at the last couple of days, your theta is decaying a lot. And so to make up that decay, you've got to have the stock really move. EMA cross is 513. That's the EMA numbers that I use. You can use whatever EMA system you want. I used to use an 821 months ago when I was first kind of transitioning from commons into options. I was using the 8/21 day EMA. I've trimmed it down. All of my studying and reading and back testing and things like that, the 513 is super, super quick. And so I'm not using EMAs for swings. I'm using EMAs as a confirmation when I'm entering in something to day trade or to scalp trade or things like that. But if I'm entering in, normally when I'm entering into a swing, I'm following volume and flow completely. Like, obviously I'm doing my technical analysis. That's like, you're not just buying based upon flow alone. You are going to lose a lot of money doing it that way. But my EMA cross system is only for when I am entering into a scalp or a day trade, if you will. I just refer to those things differently, because scalp, I'm in and out in 5 minutes. Like, I'm not even blinking an eye past 5 minutes, honestly, because my goal is to play that stock 10, 15 times, or play that contract 10, 15 times. I showed a while ago, it was AMD. I worked my way down contracts. I played like the 104, 105, 106, 107. I just kept scalping them wherever the volume was going, wherever the price action was going, based upon pullbacks, based upon breakthroughs, things like that. That's what scalping is. Day trading is more like if I enter in something at 10 a.m. and I trade it later on that day. That's, more of a day trade. They're basically the same things. But the EMA cross, you can design it however you want to. You want to use shorter numbers. Okay. You don't want to use like the 50/100. That's, you don't want to do that. Find the numbers that work best for you. Again, if you're looking for short, the 5/13 means 5 day, 13 day. That's what's looking back upon. Now it's a rolling. So of course it's always updating. It's always looking 5 days back. I like the quicker one. I think the 513, is a good, number to use. However, you can use whatever system that you want. That's just what I've come to use. How important is the period for the EMA cross, and what time frame you refer to for it? Okay, so when I am entering in via an EMA cross, it's the 5 minute or 10 minute. 10 minute is most common. 5 minute is going to be a little bit more for more volatile stocks. Okay, so if I am let's just say, for example, that I am playing like one of the memes, okay? One of these crazy volume stocks. I'm using the 5 minute. I was actually using the 3 minute for a while, but the 3 minutes just got a little bit too much noise, and I found myself exiting based upon what I thought were confirmations, and in reality, they were just false signals. So I moved to the 5-minute. I don't recommend anybody use less than the 5-minute chart. I would turn the 1 minute and 3-minute off completely. Don't look at them, especially the 1 minute. It's fun to trade the 1 minute because it's like a rush. You know what I mean? Like there's so much action going on, stuff like that. But literally, do not trade the 1 minute, especially when you're trading options. I use the 5 and the 10 minutes. So that's when I'm scalping. When I am looking into more, the 1 hour chart time frame is my most commonly looked at time frame. Okay, it's my favorite time frame. It's the one that I have when if somebody says a ticker to look at, I'm automatically going to the 1 hour first. Okay, and then I go to the daily, weekly, monthly, and then I kind of work through all of them, stuff like that. But when I'm just monitoring, like this screen over here, I'm redesigning some stuff. I'm trying to get like a little bit, different of a view, and I'm trying to change my office around a little bit. But when I'm looking at a stock for the first time, or, obviously I've looked at SPY every day for the last, who even knows how long now. The 1 hour chart is where I go to the first. That's where I'm drawing a bulk of my support and resistance. That's where I'm doing my fib lines. That's where I'm doing a bulk of my volume analysis. That's where I'm doing a lot of my price action analysis is on the 1 hour. I'm entering scalps and day trades on the 5 or 10 minute. And I say that because it just depends. It's based upon a lot of things. It's my system. If it's I don't really play meme stocks any longer. I guess it really depends on what you classify as a meme stock. I don't really know anymore. Everything's kind of a meme stock now. I don't get involved in like the GameStops and the AMCs and stuff like that. I did when they had their first run up, but I haven't played them in a very long time. I'll scalp, PLTR or other ones if you consider those to be meme stocks. CEI, I have not played that. I am very familiar with it. It has no options, so I don't play a stock if it doesn't have an option. I only trade options. And so I have not traded CEI. I've seen people talk about it on Twitter, but I no longer trade pennies. I don't trade bios. I am more focused on the blue chips, the large cap stocks and things like that, where the option volume is. That's what I'm trading. I'm not telling you to like stop trading that stuff and move on. I used to trade that kind of stuff. That's how I first got into trading. I was trading pennies, I was trading bios, I was working my way up the ladder, and throughout all of my screen hours that I've spent, I've found myself as an options trader. Never changed. That's what I'm going to focus on. That's what I spend my time studying. And, that's what I prefer to do. So I know I have not traded CEI. How many stocks do you have on your main watch list? So I have a bunch of different watch lists that I use. 50 is basically my number. And what I do to kind of give you a little bit of an idea, let me pull it over here. So bar chart is one of my favorite resources to use for after hours. Basically, what I do is at the end of every week, I evaluate the most active options. All right. And this is just purely from a volume perspective. This is a volume only indicator. Apple is on my list. Tesla is on my list. PLTR is on my list. AMC is not on my list. And that's exclusively because I've chosen not to concern myself with AMC any longer. Amazon's on my list. SDC is actually on my list now. And if you are, I don't remember when I mentioned it. I don't know if it was this morning that I mentioned. SUN Crypto. I'm sorry. You did mention me about that. I got to get caught up on a couple of tickers. SUNL. When did I mention SDC? That's what I wanted to see real quick. Was it yesterday? Was it the 15th? Either way, SDC is on my list now. I have that because it's getting like, and what I mean by on my list, I mean, it's one of the stocks that I have alerts set on. So basically what I do is I have master watch lists that I dump everything into. Okay. And then, let me actually just pull this back up. And then what I do is I have a master watch list I have, all of my high options volume. I have sectors. I have a big 20. I have current plays. I have my Friday lottos that I break down my watch list by. But what I do is on my, and then I have a market overview, which is all the big boys and stuff like that, the stuff that I want to focus on, the indices, the biggest moving stocks, things like that. But on, like, for example, on my high options volume, this needs to be updated. This is updated as of a week ago, so some of this might not be as accurate. But what I do on all of the stocks that are on my main watch list, I've got alerts set based upon support and resistance levels or indicator crosses or things like that. So anytime that a stock on that watch list triggers an indicator for me, I know that I can enter or I know that I can exit based upon that alert alone. That's how I keep up with so many stocks. That's something that I think a lot of us, we forget to do. I myself even forget to do that in a part of my routine, is setting alerts based upon your indicators or based upon support and resistance. Again, depending on your broker, depending on what you use for charting. That's why charting is so important. That's why you need to find yourself a good charting platform. I can right click on anything on my chart and click add alert, and it'll text me. Literally, it'll send me a text that said PLTR broke through this level. And I know I put a note on there. It says if it breaks through this level, that I enter into this call. And so as I'm organizing stuff throughout the week, what I'll do is I'll add a note on the alert that if this stock breaks this resistance level, that's an entry signal for me to play whatever it is on my list. Same is true for it going the other way. If it breaks through its bottom support, that's the signal for me to leave. Or if I'm going to, I mostly only 90% of what I do is play calls. 10% is puts. I just prefer to go long. Like, that's just I prefer that way. My mind works better. That I don't know what it is. I don't like playing puts. But if I am going to enter into, like, say, for example, AMD or SPY, like there's a couple stocks that I'll play both directions. But for the most part, I'm using resistance and support as alerts to either enter long or to sell. That's kind of what I'm doing with my alerts. All right. So that's a good example of something that you can take with you to sort of set up over the weekend. Again, I don't know what charting platforms y'all use. You got to find one that works best for you. Spend a little bit of money on getting a good charting platform. Don't just use, like, most brokers have legit charting platforms now, honestly. I trade through Tastyworks and I use TradingView mainly as my charting platform. And then I do all of my analysis and everything through that. So that's how 50 is my main number. I do not go more than 50 on my main watch list, but then I've got other little watch lists set up for whatever plays. So, like, for example, my watch list that I had for Friday Lottos today. And then again, like, I break it down like this. So I have the 10-minute and the 15-minute. Basically, any Friday Lotto that's on the 10-minute, I'm entering into on a confirmation of a 10-minute candle. 15-minute, it's the same thing. I'm entering into a candle confirmation on the 15-minute. I break my watch list down that simple because I need to I'm so scatterbrained. You guys have already started to learn that, I'm sure. If you've been watching me since day one, you really know that about me. But I am trying to make it as easy for me to just look and see and not have to think like, okay, I put this on my watch list. Why did I put it on my watch list? What time frame do I need to enter into on? I just want to know, like, what I'm doing with that ticker as quickly as I can. All right, so there we go with that. Let me work down through a couple of these. SUNL, let's take a look at this. I am not familiar with SUNL from a stock perspective. This is a extremely new stock, it looks like. Oh, this was an IPO. Sunlight Financial Holdings. Let's take a look here. Let me take a look and see what we got going on here. Yeah, they're new. Okay, so that's probably why I haven't. Finance, rental, leasing. Is it a Sunlight Financial? Is it a real estate company? It does have options. Actually, interestingly enough, it's got decent volume. Let's take a look here. All right. So the big contract, it looks like, is this one right here. This 750 for October 15th. 4.38 thousand. Oh, was a merger. Oh, perfect. Thank you. So it was a merger. Okay. I've not played it, so this is the first time we're looking at it. I like, so right off the bat, I like that it's got, there's volume spread out amongst contracts. There's movement into the later dates, which signifies that there is, there is what's the word I'm looking for? There's money flowing into it. Let me see if we had any big orders come through today. We had a couple sweeps come through. We had 3 large orders today. The 750 for October 15th, and then we had the 2 $5 orders for today. 14K, 15.5K, 34.8K. Those are the 3 big orders that came through. And then one other one we'll look at too. That one did not. Oh, yeah. You know what? That's because my filters are set up differently on that one. So there's some decent money moving into the stock. There's volume spread out amongst contracts, which is another indicator. What I would do right here is I think you're going to clearly see right in here is your consolidation range. Even you've got a gap to fill. Basically, hold on, sorry. You've got a gap to fill right here. That's your area where the gap is. You've got a strong consolidation area right in here. Basically, that whole range right there is consolidation. And then you've got your bottom green trend line here. You've got 1, 2 touches. You've got 3 downtrend candles on the 1 hour, which would appear that what it's doing is it's trying to go back to this level of support. So what I would do, basically, if it was me, I would click on add an alert on support resistance and wait till it does that. Because in all things considered, it's heading to pull back there. All right. Now, also, here's another thing that we were just talking about. Okay. So based upon the EMA cross, again, at that candle right there, you see that cross, the 5 went below. Okay. So this is an exit signal. That's a reason for me to leave. That 5 crossed below the 13. And then you can see, look at what happens. 3 candles in a row confirming that was a legit exit. Okay. So then what you want to do is you would want to, like I said, you want to set an alert here on this support and you want to watch what it does there. I would not enter right now because all things considered, to be honest, it looks like that's where it's headed. Okay. It looks like that's where it's headed. Now, you are developing what your key level, though, that you want to really watch for is this right here. You want to watch this area right here. That's your level that you really want to pay attention to because that's where the gap starts. If it can get to that level, then you've got a really legit chance for this thing to go back to some previous highs. Right now, I think what you're going to be watching for, again, are these 2 lines right here. Even just, let's just say, for example, hypothetically speaking, all right, let's just say that like this is what you think is going to happen. If we're going to do like a let's play the what might happen game. So here's what I think. Again, we're bouncing here, telling us that it's going that way. And then at this level right here is where it's either going to break through that gap and then it automatically has to go because it's got a gap to fill. So it's got some area to run, or what it's going to do is it's going to get to here on this previous level of support, and then it's going to test back down to that level of support. Now what happens, okay, is if it goes back down to this bottom level of support, this area that was its previous support has now become its new resistance. So now you've got to start all the way back over again. And it could, just do this. And then that's where it eventually, gets into a new level of support and resistance. Okay. So that's why it's important to see these levels, because you have to remember that an area of support that it breaks through to the downside now on its way back up is resistance. Okay. So not only did it not hold as support, it's now got to get gas to break through as resistance. And in my opinion, it's harder to break through an area of resistance than it is to break through an area of support. I think once you have a solid area of support, it's pretty strong. But again, like I was saying, you have that on your side here. You've got this level right here where there is decent volume consolidating. There's a lot of buying and selling going on here. There's a decent amount of volume that tells me that area is probably pretty strong. Okay. So we put that all together and we say this. you're again, in just a very simple way, watch for a bounce off of this green line right here. That's the bottom resistance. And then watch for a test at this area right there. If it can get back to about right here, again, it's got a chance to really gap up and fill. And then if it does that, then what you also have to remember too, that like people have alerts set for a lot of these things. And so when a stock gaps up, or it's highly shorted too. He said over 50%. That's another thing. Okay. You have to remember, people have alerts set on stuff like gap fills. Okay. So if there's a gap on a stock, it goes on a watch list for me. And I've got alerts set that if a stock breaks into that gap area, typically what you see is a lot of price movement. It might, that's an alert that's going to trigger for a lot of people. And then what's going to happen is volume's going to come in. So if it gets through an area of resistance, that's also a gap to fill, you're going to get a push on the gas because more people are going to enter in. So you have to take that into account as well. Hope I answered all your questions on that. I could sit and talk about that one for a while. That's a really good looking chart. APPS, apps, Kathy Woodstock. That's one of the Kathy Wood plays. I actually have this in some of our longer term stuff. Super strong stock here. Let's click over to the daily real fast. The issue though, that I'm seeing is this. I love this is actually a really good looking chart. Okay. Charting 101 here, and we're going to close out because it's just about 6 o'clock. All right. So you've got basically what happened is a textbook reversal off of a level of support. Okay. So the green line again is your level of support. What happens? Level of support, reversal, straight up. Okay. So that super strong indicator for you. If you are looking for, if you're looking to kind of like rank on your list of things like, well, what's strong, what's a weak indicator, a bounce off of an area of support or resistance is one of the top things that you should look for. Okay. If it gets to an area of support and bounces and continues, that's super strong. Okay. And you can see that's what it did here. So now you've got a vertical level of support. Not only did you have what happened here before, really quick, let me zoom back out. This green line, slight downtrend. Again, it was in an ABCDE pattern. If you're looking at the waves, if like an Elliott wave pattern, it's in that up, down, up, down, up, down pattern. It has tested support. You've got a strong level of support. It's broke through an area of resistance, and it's now made, because technically right here, this level right here is now your new area of support. Okay. Because it broke through that was resistance. So it's got a strong support there. It's got a strong support on this. It's through the volume shelf, which means that, every indication here, it's got 2 huge spikes in volume. Every indication on this is a fantastic stock. Just from looking at it from a chart perspective, looking at it very quickly to kind of go over it for what we're talking about, this is an entry all day long. Let's take a look at what we have on the contracts. Decent volume today. It's got weeklies. So let's go out to October 15th. There's your big number right there. The $70 strike, which is $4 and not even away, had 3.6 on the volume. And then if you even get into, like, for example, next week's weekly, the 70 had 2.1. There's a lot of volume moving around. All these things are confirming that, yes, that's an entry signal for me, basically to say. Okay. You need to watch out, though. It does have earnings reporting on November 4th. So that would be, I would not enter into a position that's after that. If you were going to take a new position on this, I would go for the October 15th area, $70 or $75 call. I think you're safe on. But again, you're at an area right now where it has broken out of a downtrend. It's broken out of its previous area of resistance. It's bounced off its support. It's tested support, confirmed in an uptrend. All things tell me you are good to go on that. What indicators do you have on? Okay, so basically what you're looking at here, I'll go top over to the right, or I'll go to the bottom over to the right. The bottom here is your RSI indicator. I don't really rely on that too heavily. That's more of a gauge for me just to kind of tell what's going on. These gray and darker gray bars right here are just simply volume by price or volume by date and time. The lines up here are all support and resistance lines. The white and the pink right here. Let me zoom in a little bit more. These are my EMAs. I use those as an EMA cross. I use the 5-day/13-day. When the 5-day crosses up above the 13, that's an entry signal for me. And then over here on the right, this is what's called the volume profile indicator. This gives you a buy-sell volume indication based upon price. I recommend everybody, if you do not have that indicator turned on, I recommend finding one that works for you and turning it on immediately, because it will drastically change the way you look at your chart. Stuff will jump out a lot clearer for you, especially when it comes to support and resistance. And I'm a big teacher of support and resistance. And so anything that you can do to help yourself see that. So, all right. What is it? 6:02. All right, we got to wrap up. All right, so real quickly, I know there was some old. I'm going to go back through. Let me actually do this here real quick. Let me drop my website in the chat. Basically, what I want you guys to do, if you go to my website, tradinggrounds.live, on the top of my webpage, you are going to see links to. Are these posted publicly? The ones you got are nice. I know some people don't like sharing them. Are you talking about the indicators that I use? And if so, they are public indicators. Absolutely. You can, I use TradingView. All you have to do is go to indicators and then click on volume profile, and they're all right there. Depending on what platform you use will determine if they are available or not. Easy said, do you keep an eye on SPY and triple Q while trading options? Absolutely. So over my right shoulder on this monitor here, I have a dual chart up that looks at SPY, QQQ, VIX, UVXY. I follow those all day long just to see movements and stuff like that, because once you start to kind of understand how they react, you can figure out how other stuff reacts too. So yeah, I do watch those all day long. I don't really, unless I'm actively trading them, I don't have alerts or anything like that set, but I've always got an eye on it somewhere. So yeah, I do have there. But anyways, on my website real quick, here is tradinggrounds.live is my website. Twitter, YouTube, TradingView, Discord channel invite. If you are interested, oh, you're okay. Trust me, I'd rather you get your question answered, and you are not cutting me off at all. I am here for you guys. That's 100% okay. There's a Discord channel invite. We have a completely free Discord channel. We have a great community. A bunch of guys that are in here right now are actually in our Discord. If you have questions, if you want to consult with me further, if you want to get trades evaluated or stuff like that, just send me an invite on Discord. We'll do it through that. I try to keep all of my conversations centered to Discord because I get too overwhelmed with DMs on Twitter or DMs on this platform. So I try to do everything through Discord. Send me a request on there if you have a question, or if you want your trade evaluated if I didn't get to it, or if you just, as I was sort of talking here, you had a question about something. Please feel free to just, send me a question on there. I'll get to it easily. I spend all of my days. I spend all of my days on Discord. I really do. I spend a lot of time on Discord. Trading hours. I'm available all day on Discord. But please feel free to send me a request. I do live trading through Discord. Yeah. I am trying to get my. Hey, Justin. Good to see you. Justin is a friend on Twitter. Appreciate your kind words. Thank you for stopping in. I appreciate that. I was doing live trading for a while. I was running on my YouTube and Twitch page. I was running charts, scans, news, all of that. I've not gotten back into that, but the short answer is I live trade through Discord. You're welcome to join the channel. I do most of my work through that anyways. Hopefully here, maybe next week, I'll start back live trading on YouTube and Twitch. But if you do, if I do start those things again, I'll post on Twitter. So just follow me on Twitter. I'll get you guys connected. Other than that, listen, we're here every single Friday night. You always know that I'll be here. If not, I'll post in advance on social media if I'm taking the night off or something like that. But pretty much I'm always here on Friday nights at 5 p.m. Eastern. Yeah, smash that like button. Help us out. Get the content out in front of other people. It's free to do. Helps us out. Make sure you subscribe to the Benzinga channel. We have content all day long, every market day. But again, 5 p.m. Eastern, every single Friday night here is technically options. We're the last show of the week, so we close everything out. We turn the lights off. I appreciate those kind words. You're awesome. Learned so much from this Friday sessions. Thank you very much. If you guys ever have any questions or something specific that you want me to address, connect with me on social media. If not, guys, have a wonderful weekend. Stay safe, and I will see you guys next Friday or sooner through Discord or on social media. Have a wonderful weekend, guys. See ya. Thanks.